the Historical Materialism project, please.
All right, I think I will start and welcome us to this session, having all been wowed by animated Seb once again. So welcome everyone to this session of the Historical Materialism Conference, which is going to be a discussion on the Deutscher Prize winning book of Brett Christopher's The New Enclosure, and responding in part to Brett's lecture, which has been put up earlier. I'm Rob Knox. I'm a member of the HM editorial board, and I'm also a member of the Deutscher Prize committee, and I will be chairing this session and also kind of telling you some things. So first I'll introduce our speakers, then I will announce the exciting news of who has won this year's Deutscher Prize, and then we'll start off. So our speakers today are Brett Christophers, who is a professor in the Department of Social and Economic Geography at Uppsala University, Mary Robertson, who's a former head of economic policy for the Labour Party, and Grace Blakeley, who's a staff writer at Tribune and author of The Corona Crash, How the Pandemic Will Change Capitalism. Go buy that book. And on that front, you'll see in the YouTube chat that also Brett's book is on a 30% discount from Verso, in one of those very rare Verso discounts that we never see happening. So snap it up, because otherwise, when will the book be on discount again in Verso? So before we start properly, I think it is incumbent upon me just to recount our Deutscher Prize shortlist and then excitingly announce the winner. So we had 5 really excellent books shortlisted this year that I think really showcase the kind of diverse range of Marxist thinking and writing that's going on today. So we had Ashley Borer's Marxism and Intersectionality, John Bellamy Foster's The Return of Nature, Michael Goldfield's The Southern Key, Daniel Andres Lopez Lukács, Praxis in the Absolute, and Kat Moore's Ernst Bloch's Speculative Materialism. And I'm really delighted to announce, imagine a drum roll in your head now, that John Bellamy Foster's book, The Return of Nature, has won for this year, which is an excellent book on Marxism and ecology, like really demonstrating us the importance of this, and I think well worth a read on your part. So with that over and done with, we will now get on with our speaking. So Brett will speak first very briefly, Mary will then speak with her response, then Grace, then Brett will come back with a more full response. So Brett, if you want to get the ball rolling, that'd be amazing. Thanks.
Sure, thanks, Rob. Thanks, obviously, to the prize committee for the award of the prize in the first place for the book, for The New Enclosure, which came out 2 years ago now. So it was a 2018 book. And so ordinarily, if it wasn't for the crisis, I would be in London now and I'd be doing a lecture now. But obviously, because of circumstances, I did a pre-recorded lecture, which I'm guessing that some of the people, but probably not all of the people who are listening to this now, will have watched and listened to. And I guess all I wanted to do by way of kind of preparatory comments was to say a little bit about kind of how I arrived at that lecture and why I decided to talk about what I did talk about. And so the book for which I won the prize, which was The New Enclosure, was a book about the UK over the last 30 or 40 years. And it was a book about the privatization of land in the UK over the last 4 decades. And it was really a book about how that process has led to many of the kind of negative consequences that are pretty central to the UK's political economy today, in terms of kind of broader social and economic dislocation. And I guess one of the themes that I tried to focus on in that book was how that process of land privatization has contributed to the growth and enrichment of a fairly significant class of land and property rentiers over that period. So property companies, developers, buy-to-let landlords, and so on and so forth. And one of the things that became apparent to me when writing the book and thinking about the book and working on it was that if you think about the UK economy more broadly, it's fairly clear that land rentiers and property rentiers are only one subset of a much broader population of rentier type corporations and individuals who profit from the control and privatized ownership of a range of different assets, which go well beyond land and property assets. So so the book that I started working on after finishing that book, and which is actually coming out next week, was a book about, I guess, rentier capitalism, or UK-based rentier capitalism more broadly, where land is certainly part of that picture, but it's only one part of that picture. And so the book looks at other types of important assets that form the basis of rent-based income streams across the economy more broadly, so ranging from natural resources to digital platforms, financial assets, infrastructure assets, and others. And so I guess what I wanted to do with this lecture, which I, as I said, I would have been giving this evening, but which I pre-recorded, was to try to build on that subsequent book. And so one of the things that became very obvious to me when I was working on that book was that kind of process of rentierization of the UK economy is clearly bound up in many ways that aren't necessarily straightforward ways with trends of growing inequality and class process of class transformation, I guess, for want of a better word, within the UK economy. But that aspect of it is something I didn't really look into in any detail in the book. And so what I did was try to use this lecture as an opportunity to explore that aspect of rentier capitalism more broadly. And to kind of cut a long story short, the basic theme of the lecture that Mary and Grace are going to be responding to, I think, in large part, is basically the argument that a lot of the stuff that's been said in recent years about contemporary capitalism and its rentier dimensions in relation to class and inequality has focused very much on asset ownership by individuals and households. So if you look at the work of people like Piketty and Guy Standing and others, that's very much their focus. So it's the ownership of financial and property assets by individuals and households. But the thing that became very clear in writing the book was that most income generating assets today are not owned by individuals or households, they're owned clearly by companies. And so what I wanted to do in the lecture was try to think a bit more in a bit more of a focused way about how we can think about class and inequality, specifically in relation to corporate owned rent generating assets, and whether indeed whether it's even appropriate to do that. So that's what I've been trying to do in the lecture. So that's all I'm going to say by way of introduction.
Okay, Mary, do you want to go?
Thanks very much. And yeah, I'm really, really pleased to be here. Without sounding too kind of toady, I've been a huge admirer of Brett's work since I was at the very beginning of my PhD. It's always kind of incredibly thorough, incredibly insightful, at the very cutting edge of political economy. So it's a real honour to be asked to be here today, if not a little bit overwhelming. I am going to say, kind of focus 2/3 on the lecture, and then kind of add a third, or kind of one comment on the book, if we have time. If I have time. So starting with the presentation then, I mean, there's so much in there. I kind of, in preparing my comments, I got kind of bogged down in a lot of the details, and then tried to kind of step back and say, this really is an issue at the cutting edge of political economy in Britain. And I tried to step back and think, why is that? What are the main kind of issues and areas of interest? Why do we care so much? And I think there are two main reasons. One is whether the nature of class and exploitation has changed as a result of the growth of rent seeking. And the second is kind of a concern that a rent-based rather than a productive economy is in some sense weaker or unsustainable or more volatile. So I'm going to kind of consider each of these in turn and kind of explore what Brett's analysis says about each of them. So on the nature of class and exploitation then, Brett says fundamentally, no, Has the nature of class and exploitation changed as a result of the growth of rent seeking? Brett says fundamentally no, it hasn't, in the sense that the income from work still massively outweighs income from other sources. Now, I really welcome this and would emphasise that I really welcome this. I really welcome as well Brett's stress or focus on corporate rent seeking as opposed to individual rent seeking. And I would emphasise as well that the continuing relevance of what I suppose is a Marxist conception of rent has a logical as well as empirical underpinning. So as well as the empirical underpinning that Brett points to, it has a logical underpinning. And this is that the growth of asset ownership hasn't changed the fact that most people are forced to sell their labour power to access the means of subsistence. And this is the core of capitalist exploitation in Marx. As Brett shows, it fundamentally hasn't changed because income from work significantly outweighs income from assets for the overwhelming majority of people. So Brett then makes two further claims about how the growth of rent seeking has changed class relations. The first is that there has been increasing stratification between different types of workers within corporate rentiers, reflecting how they relate to the asset in question. And the second is an argument that a growing share of the workforce has been effectively devalued as a result of being perceived or classified as unproductive. So I think there's a number of points to make on each of these. For example, on the first, I would question whether the divergence between executive and average pay has been phenomenon that is unique either to rentier capital or to this period of history. I think in the last few decades, it's been a more general phenomenon, and that this isn't the first time in history that we've seen that pattern. So that's the kind of first question, Joe. That's the second. On the second point, that a growing share of the workforce has been devalued as a result of being perceived or classified as unproductive, something which Brett uses as a basis to argue that we should drop the Marxist distinction between productive and unproductive labour. There are a number of points here. First of all, in my view, Marx's distinction between productive and unproductive labour is value neutral. It's a question of the social relations that define that labour and not its material characteristics or its usefulness. I also don't think it's true that all of the labour Brett points to would be classified as unproductive under Marxist categories. Google employees, for example, a number of them enhance the use value or surplus value of a commodity and so are productive in Marxist terms. But sort of regardless of those specific arguments against each of the two claims Brett makes about the impact of rent seeking on class relations, of impact of corporate rentiers on class relations, I'd focus on a bigger point. And this is that I think both arguments are missing an account of how decades-long attacks on trade unions and workers' rights, in tandem with the lowering of the social safety net, have lowered the bargaining power of workers. In my view, this is the primary cause of the deteriorating conditions which Brett is seeking to explain in both of the points that he makes. And I'd add to that, I'd also caution against an account of class in Britain that abstracts from the global division of labour. So Brett, towards the end of his talk, raises the question of how the British economy relates to the global economy, but it's raised mainly as an illustration of how Marxist value theory might be rescued in the face of his analysis. And I'd turn the question round. I'd say, can we really understand the British economy and the class stratification within it outside of its global context? To what extent does the kind of rent seeking that you're talking about, Brett, depend on us importing necessities and capturing value produced elsewhere? And in my view, we need to start from there, sort of regardless of whether or not it rescues Marxist value theory. So then turning to the second kind of, I think, main reason why the growth of the rentier in contemporary capitalism is seen as important or interesting, and this is the concern that a rent-based rather than productive economy is in some sense weaker or more volatile or less sustainable. You know, we're kind of accustomed here in the common refrain that to be concerned that Britain doesn't produce things anymore. So I wanted to kind of probe what Brett's framework says about this a bit. And yeah, this is, I recognise, a bit dangerous because I'm responding to a lecture that doesn't seek to directly address this, and I haven't read the book because it's not out yet. But that may just, this may all be dealt with in the book, and it may be that then the comments are easier to respond to. But my concern is that we can't, in order to try and understand the implications of what Brett's describing, a growth of kind of rentier corporations, the implications of that for the economy as a whole and its operation, is that my concern is we can't answer that without having an account of how rentier capital relates to non-rentier capital, and what this means for the capitalist system as a whole. And here I worry that Brett's definition runs into problems and even risks becoming circular. So fundamentally, it's not clear to me what, in your definition, Brett, is non-rentier activity. So you say it's the means of production, or you contrast rentier corporations as ownership of assets that aren't the means of production, machinery, tools, etc. But this is far narrower than Marx or indeed any of the classical economists maintained, and doesn't address kind of conceptually what it is about the means of production that distinguishes them. So I tried to, in trying to answer this question, I tried to kind of find an answer, see if an answer is borne out by the rest of your discussion. And I'm left worrying that it isn't. So at a conceptual level, for example, it feels to me that there's, your definition of rentier involves an elision between classical and neoclassical concepts of rent. So in the classical definition, it's scarcity or non-reproducibility of a good that is key, that allows it to be rent, that allows it to generate rents or be used to appropriate rents. So maybe my question to you is that what's doing the work? But I think there's a concern there, because when you later say that labour in rentier companies is productive, it suggests that this definition isn't available to you. So I'd then ask you then relying on the neoclassical definition of rent, which is not so much about the type of activity, but about the market conditions, in particular the absence of perfect competition. So that's a question, really. The implications of each of these definitions of what rentier capitalism is for what non-rentier capital looks like are really quite different, and it wasn't clear to me from what you said which one you're relying on. Taking a different approach, so not so much at the conceptual level, but at the kind of an approach that offers a definition by example, because there are lots of examples in Brett's presentation. Again, here I have concerns. So one of the highest paid, so you graph a number of CEO median pay ratios as part of your argument that in rentier corporations these ratios have increased. But one of the companies with the highest ratios is Diageo, which is a manufacturer, and you kind of address this, you acknowledge this and address it by saying that the ratio reflects the role of branding in Diageo's business model rather than its productive activities. But this is very much sort of asserted rather than shown, which again concerns that the conceptual definition is not what's leading the analysis here. And finally, at an observational level, for me, a number of the categories that you point to seem quite straightforwardly to involve combining labour with means of production to produce something that's sold for profit. You give the example of infrastructure. I think water treatment, for example, involves the combining of labour with means of production to produce a commodity that's sold for profit. Natural resources, there is oil extraction, providing the services under outsourced contracts, house building, as well as the rent that accrues to the land. There is the building of the houses on top of it. You later call this the sweating of assets, but again, I worry that rather than demonstrating that rentier activities have become more important, you're in danger here of simply defining non-rentier activities out of existence. And I'd like to argue that this feeling of circularity disappears if we allow for the possibility that sectors and companies engage in both productive activities and rent seeking. Or in your terms, that companies and the sectors you point to combine both means of production and other assets. And that the advantage of this is that understanding the kind of increasingly rentier nature of rent-seeking nature of Britain's economy involves studying the relationship between them, both within and between companies. So rather than classifying particular sectors or particular companies as either rentier companies or not, or rentier sectors or not, we say, let's look at these activities. To what extent are their processes of accumulation, value creating, to what extent are they rent seeking, and how do these two play out? I think we can explore that on a kind of a company level, sector level, national level, and indeed international level. And I think this is, I'll just add that I would see that argument not so much as what I really didn't want to do in this talk is get bogged down into, are we dogmatically defending Marxist categories or not? And I think that's a very interesting road to go down. What I'd rather see this as is defending Marx's method, which is defining categories in terms of the core logic of capitalism and gradually building those on those concepts with more empirical detail to enable conjunctural analysis. And I think that's often permits less neat theory, but greater conceptual clarity, while at the same time incorporating a lot of the observable changes to capitalism now compared to the time that Marx was writing. So that's the end of my comments on the lecture. I'm now going to just make some brief comments on the new enclosure, if that's all right. So I know that hopefully a lot of people watching have read the book. It's been out for some time. You should definitely read it. It's absolutely brilliant. What it is an incredibly thorough documentation of the process of land privatisation in Britain, and really irrefutable demonstration that the justifications given by policymakers at the time for land privatisation didn't make sense, and that the promised benefits have not materialised. It's so incredibly important to have this kind of evidence to arm us in our arguments against privatisation. So it's really, really a huge contribution. And so convincing is Brett's presentation of the gap between the stated intention of the policy, land privatisation, and the reality of it, that I finished the book feeling that the main takeaway is to show sort of incontrovertibly that the privatisation of land was thoroughly and pretty much solely ideological. But what's striking, given that, is that Brett explicitly refuses to engage with privatisation of land as such, doesn't want to engage with it, doesn't want to sort of name it as ideological, I guess. So he argues that we should take policymakers at their word when it comes to what motivated the privatisation of land, because any other interpretation must be speculative because the evidence simply isn't available. So I want to challenge this idea that the stated intention of policymakers is the best starting point for understanding the purpose of policy. I've got sort of three main points to make in relation to that. The first, bit of a sneaky one, but I think you're a bit inconsistent in your application of the idea that we should take people at their word, basically because the same benefit isn't granted to house builders. So you're kind of ready to say that when house builders say that the reason for land banking is because of the planning system, you're sort of happy to say, oh, that's bollocks. They have land banks for speculative reasons, but not so ready to dismiss policymakers saying what the reasons for privatisation of land are. Relatively small point. Second point is that I think the influence of particular interests in policy-making processes can be proven if, instead of treating Whitehall as kind of a black box, which is how it often appears in the book. We look inside and see how policy has come to, and crucially, what interests are most influential in determining that. I think if we think, for example, of the work that something like the Good Law Project have done in exposing the corruption of contracting during COVID, I think it's clear that the influence of particular interests in policy making is discoverable and provable. And the final point is that I think, say in any other interpretation that doesn't rely on stated intention of policymakers must be speculative because the evidence simply isn't available. I worry that you're setting the evidential benchmark so high that you're effectively ruling out theory. And by theory here, I mean a mode of explanation that takes as its starting point not the empirical investigation of processes through which policy is determined, but rather the observed outcomes, which are then used to form explanatory hypotheses rooted in our understanding of the logic of capitalism. So, for example, I would propose that a better explanatory hypothesis of the privatisation of land than the stated reasons given by policymakers, which you convincingly demolish, might be that in the context of the crisis of the late 1970s, growing dominance of a particular section of capital, namely speculative finance and real estate capital, the privatisation of land helps recovery by opening up more sites for speculative accumulation and, I would argue, like other privatisations, creating new forms of appropriation. Now, it's obviously completely fine for Brett to say, that's not what I'm interested in doing here, and what he's done is incredibly useful. But I would argue that there's something to be gained by acknowledging ideology as ideology in terms of what it adds to our understanding of the politics of land. So when you ask why there's been limited political opposition to the privatisation of land, why we haven't seen a Polanyian counter movement, I don't think you've given yourself all, I think the account you give is convincing, but I don't think you've given yourself all the tools to answer it, all the tools you need to answer it. And that's because I think central to answering that question is how the set of particular interests that had an interest in the privatisation of land have come to be articulated in terms of the general interest. I want to just give two illustrations or two examples from my experience of working for the Labour Party to help reinforce that before I finish. And the first is Conference 2017. I think knowing that, being conscious that we hadn't gone far enough on housing and land in the 2017 manifesto, which was due to internal resistance. I suppose I can name names now, I don't work anymore, by the then Shadow Secretary of State for Housing. Jeremy announced a number of policies designed to tackle injustice in the housing market and particularly state-led gentrification or social cleansing. It was rent caps and a mandatory requirement not just to have ballots for any estate regeneration, but that all estate regeneration would require, it was mandatory for any estate regeneration to offer every single resident a new property on the same terms, the same kind of property, an equivalent property on the same terms in the new development. So designed to kind of stop that social cleansing. And we kept this quite hush before the announcement, and then we got enormous kickback from Labour councils and from the then Shadow Secretary of State for Housing. And I think what this is a reflection of is that Labour councils had internalised the ideals and become deeply embedded in the processes you describe. So it's not as simple as something Whitehall did to local authorities, but something that had been sort of become so entrenched and internalised in ways that we can only understand and explain by engaging with the ideological nature of land privatisation. Similarly, another example, summer 2019, we published a land report, which was put together by George Monbiot. Very clear that none of this was Labour Party policy, but did have sort of addressed a number of the issues you address in your book, and proposed hypothetical possible policy solutions to the problems of land privatisation. And as I say, very clear that this was not Labour Party policy. the result was pretty much constant from then until the general election night later in 2019. A constant stream of scarce stories in the right-wing press. Labour's going to privatise your garden, Labour's going to concrete over your garden, Labour's going to whack up property taxation on your housing, etc., etc. And again, I think the way in which the idea of land, housing, and the role of the kind of wider intellectual state apparatus, I would say, have come to reinforce these ideas, demonstrate that Whitehall and policy effect, just focusing on, I'd suggest it's an indication that just focusing on Whitehall and stated intentions behind policy is too narrow a remit to understand the lack of resistance to the privatisation of land. And I'll leave it there. Thank you.
Thanks very much, mate. That was great. Grace, would you like to get out?
Can you hear me now? Yeah, cool. Thank you both so much for those talks. That was really interesting. And I suppose I want to kind of, based on a reading of both of Brett's books, actually, because I was lucky enough to get an early copy of his new book, which is absolutely fantastic, and I would definitely recommend people to pick up, is to kind of historically and I suppose spatially contextualize the development of rentierialization and what we might call rentier capitalism, what I've previously written about as financial capitalism, what other people have called, the dominance of the FIRE sectors, finance, insurance, and real estate, what has been referred to as under many different guises, but kind of historically and geographically contextualize that, and looking at particularly both the juncture of the financial crisis and the pandemic, and tentatively think about where we might be going next. So yeah, for me, and I think Brett's work brings this out quite clearly. I think we have this idea of the last 40 years of, let's say the dominant neoliberal ideology as being about the dominance of kind of free markets, the retreat of the state, and a kind of shrinking and a reduction of state power. I think what Brett's work and indeed another of other theorists of neoliberalism bring out is that that's not really what this phase of capitalism that we're living under is about. We're not seeing a smaller state. We're seeing a state that is being reoriented towards supporting the interests of capital and the interests that are being served by state policy in various different parts of the world and at various different historical junctures depends upon and reinforces the interests of those dominant sections of capital. And I think, what I would like to bring out and what I would like to kind of argue in response to Brett's work is that what we are seeing as a result of rentierialization and of indeed the kind of reorientation of state power to support the interests of this particular class is a kind of I suppose the institutionalization of capitalist planning. And I think that is associated with a number of the problems that Brett brings up, in particular in the last book, in terms of why, we're thinking about the fragility of the particular kind of capitalism that we're analyzing today, but also generates potentially some interesting, vectors through which we might think about challenging this model. So yeah, I mean, when we're thinking about kind of the rentierialization of British capitalism, and we're looking at this as a kind of, process of historical evolution and trying to contextualize it within a capitalist world system, I think there are a number of different things that we can look at as to why you might call the UK a kind of particularly financialized or rentierialized economy. So there's the kind of long-term foundations of this model, which is obviously the important role of the City of London in British political economy, which if you wanted to, you could trace back to, William the Conqueror. And there is certainly an element of kind of, what you might in evolutionary economics call the kind of, embedding of particular historical trends leading up to those kind of reinforcing effects based on the interests of this particular class. So you can look at it, in evolutionary terms. You can look at the historical role of the city through the context context of the evolution of British Empire. You might see it as the kind of final phase of imperial power, as an author like Origi does, or you could see it as specific to either, the particular form of British capitalism in the context of the capitalist world system, which is indeed what I suppose a number of neoclassical economics do when they refer to the importance of the City of London in terms of, its geographical situation in the middle of lots of different financial markets. Or indeed, you can look at this more as a function of the management of British capital as part of the development of the British Empire. And indeed, I'll talk about actually that the role of the city in international political economy as part of the third point that I want to make as in terms of contextualizing these historical and geographical foundations. I think the second thing we obviously need to think about, and this is perhaps the most important point in terms of the talk that I want to give, has been the reorientation of state power towards reinforcing these interests that obviously predate the shift to what we might call kind of neoliberalism or financialization in the 1970s and 80s. And I'm not going to say too much about this because I'm going to talk about it a little bit later. But obviously, you have in a number of different ways the use of state power to support and reinforce the interests of landlords, the city, and particular components of what you might call the FIRE sector. And then, of course, it is, as Mary was just saying, important to contextualize all of this in light of the role played by the city in the capitalist world system. It would not be possible, I don't think, to conceive of the shifting nature of class relations within the UK as a result of financialization or rentierialization without looking at the way in which productive activities have obviously been exported to many parts of the global south. And looking at this from kind of a standard Marxist perspective on empire, you obviously have the accretion of profits in the UK, which are then exported and used to kind of consolidate this imperial set of processes that takes place abroad. But I think what's perhaps most interesting about the role of the city over the last 40 years is that it's been critical in deepening this form of financial globalization that has in many ways kind of completed the imperial circle. So if you have an accretion of profits in the UK as a result from kind of historical capitalist development, they are then invested offshore and deepen this process of imperialism by consolidating relations between core and periphery. What's been interesting about the role of the city is that it's kind of completed this circle by ensuring that any profits that are generated offshore in parts of the global south are then repatriated into big financial centers and actually used to reinforce the process of domestic financialization. So if you look at the kind of flows of capital between different areas of the global economy, you can see that capital from parts of the global south ends up being quite central in facilitating the particular dynamics that lead in the US and the UK and other very financialized economies like Spain, Iceland, etc., to their processes of domestic financialization. So for example, the way in which international investors, particularly in for example China, were there purchasing the bonds of Fannie Mae and Freddie Mac and allowing this process of securitization in real estate markets to really become embedded. So this the predominance, I suppose, of rentier interest in British capitalism has some clear geographical and historical foundations, and I think Brett's work brings that out quite clearly and quite well, and it's also something that I've written about before. I think, the thing that I mainly want to talk about today is, as I mentioned at the beginning, we have this view that we're living through this kind of new laissez-faire, that actually we're living through a high point of capitalist planning. And bearing in mind those kind of longer term historical foundations, I want to talk about the way in which basically the way in which that model has been consolidated over particularly the last 40 years. So basically the way in which we've kind of developed effectively kind of an oligarchic form of rentier capitalism, where you have cooperation between large, highly monopolistic or oligopolistic multinational enterprises, a similarly oligopolistic financial sector, and interests within the British state, particularly within central banks, but also in the Treasury, and that being kind of reinforced by the role of international institutions as well. So looking back to the 1980s, which I suppose, you could argue is the moment in which this model of rentier capitalism really becomes embedded, there are a number of ways in which state power is used to reinforce it. So again, pushing back against this idea that the 1980s is all about the removal of the state from the economy, as though you have markets over here and the state over here, or markets, economics and politics. And, there's intervention between one and the other, but they're not part of the same system. Kind of pushing that view of the world out of the way, you begin to see the way in which, the role of the state is not shrinking, it's reoriented towards supporting particular interests over others. So obviously, as Mary was just mentioning, the role of the state in basically waging class war by introducing anti-trade union legislation, by actively using the power of violence to dominate and really just kind of destroy much of the UK's labour movement. That was obviously one of the early ways in which this new form of planning was used in many different parts of the world. But also, the reorientation of regulation. We have this view of this period as one of deregulation and one of privatization, sure, but it is important to bear in mind that the financial crisis couldn't have happened in the way it did had it not been for re-regulation, had it not been for the imposition of very particular laws and international regulatory norms that allowed for whether we're talking about the Basel agreements and the particular ways in which they conceptualize different assets as part of bank capital, which then, encouraged actually the use of, encouraged banks to hold on to some of those riskier assets on the basis that they actually weren't as risky as things like corporate debt. Or whether we're thinking about, it's something perhaps even more profound, the implicit subsidy that the entire financial sector in the UK has and has continued to have for decades now, based on its importance to British political economy. I don't think it's controversial to say that we couldn't have had the financial crisis, we couldn't have had the dramatic growth of the finance sector before 2008 as part of British political economy without the assumption on the part of all actors that if something was to go wrong, the state would step in and bail these actors out. And you can say the same thing in the US. In many ways, it's clearer in the US because of the overt role of these kind of government-sponsored enterprises in this process of financialization. There's loads of different ways in which this begins in the 1980s. It becomes very, very clear in the UK when you have the first real estate bubble bursting in the early 90s. And then when you have the tech bubble bursting in the early noughties, because again, you see the use of state power and particularly of central bank power. And, that's a whole, the changing role of central banks, the ideology that's used to justify central bank independence, and then that contrasted with the facts, the material reality of the relations of power that underpin the exercise of central bank authority is a whole another thing. But what you begin to see during the early noughties, and you start to see, I suppose, in the 1980s, is the explicit use of central bank tools to promote the growth in asset prices. And this is obviously commonly referred to in the US as the Greenspan put, this idea of a kind of one-way bet in financial markets, where where investors know that if anything goes wrong, if there is a crash in financial markets, that the regulator will step in and, in this case, cut interest rates to dramatic lows, and in fact, fail to, as it were, take the punch bowl away when things are looking particularly good. And again, that implicit subsidy is really, really important for giving rise to the big, the massive. The changing nature of what happens in financial markets after the 2000s, basically, which is really when you get this model of securitization taking off. And again, partly it's because of low interest rates, right? Kostas Lapavitsas has written very interestingly on this about how, in the wake of the Greenspan part, interest rates are very low because of central banks' desire to kind of get the party started again. So what do banks do? They reorientate themselves towards making much more money on fees and on commissions, which is a big part of that shift towards securitization and the increasing role of housing in the finance sector. So again, there's this use of the state in order to promote the interests of the rentier class. Then you have 2008. And this obviously becomes very, very clear, very, very obvious, because the banks are literally bailed out with taxpayer money, and then austerity is forced on largely unwilling population all around the world. And I think the post 2008 juncture is in many ways more interesting. In my first book, Stolen, I looked a little bit more about the kind of period between 1980 and 2008. And I think some of the issues that Brett's new book brings out are some issues that have actually become deeper and more systemically important in the period since 2008. Because really, the financial crisis was the time at which it became very, very obvious that we have a planned economy, but it is planned in the interests of capital. And in the UK, it's planned in the interests of rentiers, particularly finance capital and landlords. And I think you can see this. I'm going to take two particular examples. The first is quantitative easing and its importance in, again, boosting asset prices, and particularly in kind of promoting the centrality of housing in British political economy. And the second one is the role of low interest rates and easy credit in deepening monopolization and monopoly power. And this is actually something that I think is more relevant to American than British political economy, but they're both very important. So obviously in the wake of the financial crisis, not only do we get a massive slash in interest rates along the lines of the Greenspan put, but we also get this kind of, use of unorthodox monetary policy, quantitative easing. Now, we were initially told that this was going to be a way of kind of stimulating bank lending. Of course, there was a much easier way. If the government had wanted to stimulate bank lending, it could have done that, which was by telling the banks that it had nationalized to lend to other actors in the economy. Obviously, that was never going to be on the agenda because it would have looked far too much like actual nationalization. So instead, we have this kind of get around, which is the use of monetary policy. And yeah, I mean, eventually it becomes clear, and it's a question as to whether or not they knew that this was how it was going to work from the very beginning. But that's certainly what eventually the Bank of England ends up admitting, is that QE worked through a portfolio rebalancing channel, which is another way of saying that central banks effectively decided that they were going to take it upon themselves to boost asset prices in the wake of a financial crisis that could have seen them collapse quite substantially. And it did briefly see them collapse quite substantially. So obviously, QE, the central bank creates new money. It uses that new money to purchase assets from the private sector, predominantly government bonds, reducing yields on government bonds, furnishing investors with cash, and therefore encouraging them to invest those assets in other parts of the economy. And so what we see obviously is, in the US and UK and other economies where this has been used, is an increase in price earnings ratios and in the market capitalization to GDP indexes. So kind of basically boosting equities. We see, a lot of money flowing into high yield corporate bonds. Again, as investors are reaching for yield, they're thinking about where they're going to be able to generate some of this money. We see a lot of that cash flowing into the global South, which is a critical part of the crisis that we face today in terms of the debt crisis that is currently taking place in the global South. And it goes into housing. And that has either taken place directly or it's taken place through one of asset managers. So, investments in Blackstone, for example, which has taken it upon itself to buy up huge swathes of, predominantly Irish real estate, but also to a lesser extent British real estate, and act as a corporate landlord, or for these new innovations, real estate investment trusts, where you're basically able to kind of invest directly through financial markets into real estate. And yeah, ultimately what we see as a result of that is rising asset prices across the board, rising house prices, a deepening of the housing crisis. And I think what becomes very obvious after that moment is that the combination of this new form of unorthodox monetary policy with very, very tight fiscal policy has very, very clear class implications. And indeed, I would argue that it was planned that way. Again, it is part of this infrastructure of capitalist planning that is used to basically forestall the deep kind of contradictions and problems created by this model of financialized capitalism. So yeah, I mean, tight fiscal policy creates really, really deep problems for, the working classes and actually the functioning of kind of capitalism more generally. We see a decade of wage stagnation, a decade of productivity stagnation, rising inequality, and, very acute problems for those people who are most reliant on public services, for those people who are most reliant on the welfare state, at the same time as the Tory electoral coalition is very adroitly protected based on the fact that many of them are retired and many of them are homeowners. So they have pensions which are invested in asset markets, and they have houses whose prices are increasing in value. So yeah, this is clearly part of a plan. It is the use of economic tools in order to promote the interests of a political class. And again, we're seeing the way in which this form of capitalism that we're told is the apogee of the kind of separation of politics and economics is actually fundamentally based on them being completely and utterly intertwined. The second thing I think we see after 2008 is again, the importance of, and Brett talks about this more in the new book, of monopoly power and of the role of what Mary was just talking about, which was kind of corporate renterism. So this happens in a number of different ways. I've talked about the role of QE on market-based financing for corporations. There's also obviously low interest rates, which means that it is easier for many of these corporations to borrow, particularly those that are already well established. And Marx talks about this, about the importance of the finance sector in promoting the centralization of capitalism, because obviously the bigger, less risky corporations are the ones that are able to attract the most finance. So, we have this classic Keynesian idea that low interest rates are actually supposed to be in the interests of the working classes because it makes it cheaper for them to borrow. Not only does that not end up being the case in the wake of the financial crisis, because those low interest rates aren't passed on often, it actually ends up reinforcing some of these problems, because the people who are most able to access that cheap credit are people who already own assets and indeed are the largest, most, biggest monopolistic corporations. So this feeds into a rise in, things like buy-to-let mortgages, people who already own their own houses able to kind of get access to more credit to buy more, but also this monopolization within the corporate sector. And actually it deepens the financialization of the corporation itself, because big businesses are able to access easy credit. What do they do with that easy credit? Well, in the context of tight fiscal policy and this massive debt overhang that is really constraining productivity and growth in the real economy, they use it either to kind of, boost shareholder returns through share buybacks, through, increasing dividends payments, or indeed through this really interesting new phenomenon that we're seeing with the tech companies, which is, and I think this is really central to this idea of the rentierialization of the corporation, is using their access to cheap credit, whether from banks or financial markets, to purchase higher yielding corporate bonds in other parts of the world or in other sectors of the economy. So when you look at the balance sheets of the big tech companies, they have invested in corporate bonds. So they're effectively acting like banks. These are big corporations who are lending to other corporations, which kind of turns the neoclassical model of how the economy is supposed to work on its head. And again, this is really important to the rentierialization of the corporation, and it steps up massively after the financial crisis. The other thing is, of course, how else can you use that access to cheap credit to boost shareholder returns and consolidate your position? Well, it's through mergers and acquisitions. It's through M&A. And this is something that we've seen really on steroids since the financial crisis. So you've had, these massive mega mergers in many places, but yeah, you've also had just a kind of general trend towards rising monopoly power, and this is again linked to that particular policy consignment of loose monetary and tight fiscal policy. And now, so this has kind of created a lot of problems, all of which Brett touches on in his work. So we've seen rising inequality, rising monopoly power, and the consistent attacks on the trade union movement are linked to rising income inequality. The use of quantitative easing combined with tight fiscal policy is correlated with much higher levels of wealth inequality. And all of these policies, combined with what I mentioned about the role of the City of London in the global capitalist system, is also associated with, and Brett writes about this again, a deepening of regional inequality, which is obviously linked to a lot of the kind of political issues that we face today. We also see, as I said, kind of a general increase in monopoly power, which we know is associated with, lower levels of productivity, lower levels of innovation, and lower levels of investment in fixed capital, which I think again comes back to this thing of like, is Britain kind of making enough? Well, I think that kind of skirts the important question, which is why is there this long-term decline in investment in fixed capital? At least part of that is due to these underlying trends. So low productivity, lower investment, very, very high levels of debt, particularly in the private sector. So when we came into this pandemic, there was this big problem of high yield corporate debt and the securitization of that high yield corporate debt as part of these things called collateralized loan obligations, which Andrew Bailey at the Bank of England had said when we were coming into this crisis, this is going to be a really big issue if we don't find a way to deal with it. It's a massive source of systemic risk. And finally, you know, all of these things are obviously linked to this massive looming crisis of climate breakdown. Now, I think that all of these trends in terms of, you know, the way in which state, corporate, financial power and the power of kind of wielded by international institutions have been merging in order to, based on these trends of rentierialization and also in order to deepen them, was kind of going on under the surface before the pandemic. But I think the pandemic has brought these issues to the fore. And this is, you know, we're talking about Brett, but this is what I write about in my new book, The Corona Crash. The way in which state power is deployed as this crisis happens really just sheds a huge amount of light on the power relations that upon which British political economy is based. So number one, you have the Bank of England stepping in to just provide an extraordinary amount of liquidity to financial markets, basically bailing out the financial sector. Then you have the kind of introduction of these new schemes like the CCCF, whereby the Bank of England starts buying commercial paper, starts supporting basically big businesses to be able to borrow more. And that's been the source of, you know, just basically like examples of what you could only call overt corruption, with, you know, huge government loans going to extremely large businesses, only for those businesses to dish out a great deal of that money to shareholders and lay off their workers. Then, of course, you get a break on mortgage payments for mortgage lenders. And then eventually, after a huge amount of pressure from the labour movement, you get the furlough scheme. And again, predominantly that's for workers who are in secure employment. Who is excluded from that? Again, you know, the class foundations of this planning, and it is planning that we've seen going on over the course of this crisis, become very clear when it's like finance and big business get a huge amount of support. Small businesses don't get that much support. The self-employed are completely left out. Mortgage holders get support. Private renters do not get support. Big businesses are basically bailed out they don't have to honor many of the debts that they've accrued in the previous decade. Whereas, you know, the 8 million families who were suffering under the weight of problem debt before this crisis took place absolutely do. So, yeah, I mean, I think looking forward, we've seen the way in which capitalist planning, I actually think, you know, I'm questioning myself whether or not what we are seeing at the moment in terms of the use of state power, the growing links between state power and the power of private capital, of big business and finance, is leading us into a kind of new phase of rentier capitalism or neoliberal capitalism or whatever you want to call it, characterized by effectively the kind of nullification of the forces of creative destruction that are supposed to be the foundations of free market capitalism, of the erosion of this alleged divide between politics and economics, between markets and states, and of the kind of institutionalization of the power of rentier interests that Brett talks about so expertly. And I suppose those are some of the questions and queries that I want to put to Brett in terms of thinking about how this model can be used to understand what's going on right now and where and how capitalism is developing and where we're likely to be in the coming years. Thank you. I will stop there.
Thanks, Grace. That was really good. So thank you for both Grace and Mary for those really excellent and thought-provoking comments. I can feel like Brett is having a bit of a sweat now, trying to think of how to what to say in response. That's how I'm feeling. So Brett, would you like to just deliver a response now, and then sure. Afterwards we'll open it up to questions, and then you can also continue to respond in those question sessions if you like to. So again, I'll just emphasize, if anybody wants to ask any questions, please just pop them into the YouTube comments now, so that after Brett's finished speaking, we can kind of open everything up. But Brett, off you go.
Thanks, Rob, and thanks, Grace and Mary, both of you. I'm very grateful for your engagement. You're right, Rob. My head's spinning. I'm not a big fan of having to respond sort of on the hoof to commentaries like this, but I'll do my level best to say something reasonably coherent that I hope at least makes some sense. And I guess where I want to start actually was where Mary finished, which was with the new enclosure. And hopefully you'll see where I'm going to go with this. I think it's a logical place to start. And as Mary said, one of the main things I tried to do in that book was to sort of critique the state approach to land privatization and the state logic and articulated rationale of land privatization on its own terms. And I think, certainly one of the reasons I did that was that I think it was difficult to get to some of the kind of details of the close connections between the state and the private sector that Mary talked about. And for sure, you can do more on that front than I did. But I think what I tried to do was to take the given rationales and logic of privatization and to I guess to deconstruct them so thoroughly and in such detail and in that basically where you arrive is that there's no alternative at that point, and saying, let's work with the theoretical proposition that the state is acting in the interest of capital. Let's actually at least give the state the benefit of the doubt and see what they've said about why they're doing what they're doing. And once you show beyond any reasonable doubt that there are no other rational grounds for understanding what happened, then you almost end up at that proposition rather than starting with it. And I think that's what I tried to do, but I think I certainly failed to sort of make that point as clearly as I probably should have done. And you'll be interested to know, Mary, that certainly other people that have written reviews of the book, that's definitely one of the themes that's come up before, was the one that you highlighted. And so, I guess your reading of it was similar to the one that various other people have had. So anyway, I think where I end up in that book is what was going on in that process was that you did clearly have the state acting in the interest of capital. And this is something that Grace has talked about just now. The state not taking a back seat, and it's not about free markets, it's about the state being very active and putting in place the conditions for capital profitability. And I guess what I've tried to argue in the new book is that sure, the state is acting in the interest of capital, but it's acting in the interest of a particular type of capital, and which is what I refer to in the book as rentier capital. And I think one of the ways that that's become most apparent, really in recent years, is in relation to Brexit. So one of the things that various people like David Edgerton have brought out is to ask the question: well, theoretically, wouldn't you think that the party of capital would be doing or would have tried to do what capital wanted? And capital obviously was quite vocal about the fact that Brexit was not in capital's interest. And I guess you can only really resolve that kind of paradox when you realise that the Tory party is not really the party of productive capital, and it was productive capital that was anti-Brexit. Rentier capital, to one extent or another, couldn't care less about Brexit for very good reasons, I think. And if you recognise the fact that the Tory party is the party of rentier capital and not the party of productive capital, then Brexit becomes much more understandable, I think, in those terms than it would otherwise be. So that's the second point I wanted to make, was that yes, this is about an active state rather than a kind of a small state, and yes, it's about the state supporting capital, but it's supporting a very particular type of capital. What can we say about the nature of that capital? What can we say about rentier institutions? I mean, the question there, Mary, I think that's one that I do talk about at much greater length in the book. And I think one of the points I try to make, and hopefully this answers your question, although it might not do so satisfactorily, is that I guess where I end up in the book, and I think that the definition question is one I grapple with at length in the book. I don't think it's one that's very easy to come to terms with. But where I end up is that instead of thinking about pure play rentier capitalists and pure play productive capitalists, I guess the way I think of it is to say that you have capitalist institutions that are rentierist to one extent or another, and that rent is only ever part of the income of a rentier institution. And so, yes, in pretty much any capitalist institution that you can think of, you need to think in terms of the means of production and other assets. And I guess what I talk about when I talk about rentier capitalists is capitalist institutions where rent represents the predominant part of their income. But there will all, I guess the way I put it in the book is that rent generating assets always need to be put to work. They're always going to rely upon the application of what you might want to call productive labor to one extent or another. Even in the case of classic rent generating assets like land. And so that's kind of where I arrive at in the book. Whether that's a satisfactory and workable definition, I don't know, but that's kind of where I end up. I mean, the other question that came up in those commentaries in terms of the definitional aspect is where on the spectrum of classical versus neoclassical understandings of rent I kind of stand in the book, and I suspect this is going to be an issue on which I get pulled up as well, because where I end up on that is I kind of use a hybrid approach to it, and what I mean by that is that my argument is that, it's not really an argument. The understanding of rent that I mobilize in the new book is one that is basically rooted in the classical definition, where rent is about scarce assets. As you say, it's about the scarcity value of those assets. And obviously, I'm saying that instead of just thinking in terms of land, we have to think about a plethora of other types of scarce assets as well. But I also argue that there is actually something important about whether you want to call it neoclassical or whatever else, attention to market conditions. I've never really bought the kind of what you might call the classical Marxian argument that in markets everything occurs on the surface of things, and that we need to just focus on the hidden abode of production and not pay much attention to what's happening in the market domain. I've always, maybe it's the fact that I'm a geographer. I've always been much more partial to kind of the David Harvey argument that we need to think in terms of this kind of dialectic of what's going on in terms of the realm of production and the realm of exchange, the realm of realization, and that what happens in the realm of exchange and realization is actually significant, and it is actually material, not least to relations of class and inequality. And so, as I say, that question in the book is approached by saying, rent is absolutely fundamentally about income based upon control or ownership of income of scarce rent generating assets, but that what happens in the realm of exchange, what happens in markets is significant as well. And I think what Grace has been talking about, in my view, is testament to that. Monopoly power is exercised in the marketplace, and one of the marketplaces in which it's exercised, obviously, is in labour markets. And and to the point that you made earlier, Mary, about about understanding of inequality being and growing stratification along class lines in recent decades as having been fundamentally about the attack on organised labour. I totally agree with that. I mean, the only thing I would add to that is that I think there's a degree of truth in the kind of sort of semi-mainstream arguments that are coming up nowadays about monopsony and about corporate power in labour markets, and a lot of it is about bargaining power. And one of the graphs I use in the new book is to say that if you look at the different sectors of the UK economy and you look at those sectors where greatest concentration is found today, and therefore where the greatest bargaining power of capitalists is vis-a-vis workers, it tends to be within rentier sectors of the economy. So I guess what I'm saying is I don't think my argument about rent and assets and inequality is mutually exclusive from what you're saying about the attack on organised labour. I think they're part and parcel of the same trend. I guess is what I'm saying. I think they're closely related to one another rather than being separate from one another. The last point I want to make is the point that both Grace and Mary both talked about, which is about the kind of international context of all of this, and the fact that, you know, to understand, you know, not just what's going on in the UK in terms of rent and rentier capitalism, but just in terms of division through processes of empire and decolonization and the post-colonial period as well. You know, I totally agree with that. And one of the things I try to do in the new book, and I guess one of the reasons why the first 3 chapters of the book deal with financial assets, natural resources and intellectual property, is I think those are the 3 sectors of the UK economy where those connections between UK rent generating or rent seeking institutions and international markets are the clearest. So, you know, it's in those 3 parts of the economy, certainly where rentier companies are concerned, that the greatest proportion of income is being generated overseas by rents being accumulated through the ownership of, you know, fossil fuel concessions overseas, but the question of offshore and tax avoidance comes into that as well. So that's all I want to say by way of a short reflection on those things. Those were the main thoughts that came to mind when listening to both Mary and Grace. I think both of you have raised all sorts of questions that I hadn't begun to think about either in my own work that's written or in the lecture that I did, particularly for this purposes. So I'm going to leave it there, and I would be happy to field any questions that come up on the screen.
Okay, so I think we should all be up in the display now. So thanks very much for that, Brett. And I mean, I know you were kind of like saying you don't like to respond on your feet or whatever, but that was a very impressive response on your feet, I have to say. I mean, you did elaborate an entire theory of the state in a couple of minutes. So I think you can at least feel, you know, satisfied in that respect. So I'll just once again say, if people do have questions, just type them into the chat. We've got 1 or 2 things that we can start off with, I think, and then we'll see if more people have questions. And obviously, if any panelists want to throw anything back into the mix, like, feel free to do that as well. We've got a bit of time left for it, but I'm not going to like make anyone stay longer than we have to if we don't need to, because it's Friday night. There are so many things to do in lockdown on a Friday night. So we did have one question from Pete Green in the chat for Brett, which is a very, very specific question. I don't know if you can see it, but it's specifically about, in your lecture, graphs comparing employment income and asset-derived income. And Pete wants to know if we can get, in terms of your graphs, like, would it look different if we specified more particularly and looked at, say, the top 1% or the top 0.1%, and then how ratios would work with that? So at these higher levels, does distribution look different?
Yeah, I can respond to that question. So thanks to Peter for that question. So what Peter's referring to is in the lecture, I have a slide where I look at the different. So I look at types of income within the UK for the different income deciles. So the poorest 10% of the population all the way through to the wealthiest, sorry, not to the wealthiest 10% of the population, but to the highest income generating 10% of the population. And what that graph shows is that, you know, even for the top 10%, income from employment, you know, vastly outweighs income from assets, as it does for all of the other deciles. And what Peter's saying was, if you looked at the top 1% or top 0.1%, would that look different? And the answer is yes, it definitely would. But what I would also say, and this is something that the Piketty focuses on quite specifically, is that one of the big differences between today and say 100 years ago is that today you have to go much higher up the income hierarchy before you hit the point where income from assets overtakes income from employment. So today, certainly in France and the US, and all the data I've seen suggests that it's something similar in the UK, is that that's only really true for maybe the top 0.1% of the population today. Whereas if you go back 100 years or so, you didn't have to go as far up the income hierarchy as you did then. And that's one of the reasons why Piketty distinguishes between the so-called hyper-patrimonialism of that era and the mere patrimonialism of the current era, and why he talks about not there being a relatively small class of rentiers, but there being a bigger class of what he calls petit rentiers, for whom income from assets is important, but proportionately nowhere near as important as it was for that hyper-patrimonial class back in the day. I guess the only other thing I would say about that is that it's very difficult in the UK to get that data. And one of the things that people like Andy Summers have been looking at is trying to factor in how the picture might potentially look different when you factor in some of the capital gains data and other forms of asset-based income that are not easy to get a handle on. So it's a difficult picture to get a handle on, but I think Piketty's picture overall is just about right.
Great, thanks for that, Brett. So we've got a couple of other questions which I think would be worth also just putting to the whole panel if people are interested in responding. So one question is, are there significant differences between different levels of government, so national or municipal, in their level of alliance with rentier capitalists in privatization and enclosures? Are they similar? So in terms of, like, let's say the relationship with government and class formations at different levels, are they similar? Are they different, or whatever? And I thought I would add just a general thing for people to talk about if they're at all interested, because I felt like one of the themes that came up in a lot of the discussions in different ways was the role that state and law are playing in the kind of construction of the political economy of this in this kind of way, and their respective roles in doing that. And I was interested in hearing all of the panelists' reflections. So Brett, you already started doing that quite well, but I would be really interested in hearing a little bit more from you on that as well, and everyone else. Like, what role do you think that state and law are playing in the construction of these kind of relations, in the role of creating rent and rentiers, and how you think that might be significant for our understanding of the present conjuncture? So I mean, again, Brett, if you want to start, but if you don't, then don't. it's all coming straight at you.
That's fine. I mean, that's the way it should be. So I'll say a few things just to get us going, and then I'll shut up. I mean, on the specific question that I can see on the screen about the kind of the different levels of government. So I guess the argument I made in the new enclosure, and that I still believe is broadly right, is that the process of land privatization, which I refer to as the new enclosure, was definitely one that was directed by and from central government. And in a sense, it had to be in order to be the kind of comprehensive, widespread process that it was. But as Mary made very clear, you know, while some local councils were demonstrably not on board with that process and tried very hard to resist that process and tried not to sell land in the way that central government, particularly Tory central government, wanted them to do in recent decades, there have certainly been councils, including many Labour councils, that have been only too happy to partake in that process. So I guess that's the only thing I want to say about that particular question. On the question of the state and the law, I mean, the law is this kind of shadowy presence in both the book about land, but more so the more general book about rent. You know, it's there, but it's not something I play up greatly, except to say that much of the reason for the strength of rentier institutions and their ability to generate to consistently generate kind of monopolistic rents from the assets that they control is by virtue of the law, right? And you only need to think of things like intellectual property law is probably the classic example of that, but it's not the only example. So one of the things I tried to discuss in the book is how intellectual property law, both in terms of its writing, but more so in terms of its enforcement, has been strengthened in recent decades in such a way to make it easier, much easier, for the UK's intellectual property rentiers to safely and confidently extract monopolistic rents from the assets that they own. And that's absolutely about the law.
Mary and/or Grace. Grace, do you want to go? You kind of flipped
Yeah,
off.
sure. Yeah, so I think I'll start with the last one about the law, because I think that is really crucial. Another kind of good book on this is obviously The Code of Capital. I can't remember exactly who the author is, but that is definitely worth picking up. I mean, it goes a bit far in that it says that capitalism is purely a legal construct. Now, it was written by a lawyer, so you might obviously say that, but obviously what is law? It's based on a kind of projection of state power, which is of its in and of itself, as we've been talking about, reflects the balance of power between different class interests. But I think, this is actually a really important point, is the way in which the law has been used to stabilize capitalism, promote the interests of particular classes. Now, when we're thinking about the centrality of law just to like the foundations of capitalism, you can think to something simple as like limited liability. Capitalism today would not be possible without the legal innovation that was limited liability. So yeah, this is kind of very, very central to the origins of capitalism. And indeed, if we think back to the original enclosures, that was, as Marx would think about, kind of the thing that was required to get the whole process started. But it has become increasingly important in recent years. So the book, both Brett's book and this book, The Code of Capital, looks at that in quite a lot of detail. And it's just been the way in which that like the law has been able to create new categories of property and opportunities for regulatory arbitrage, which has, I think, been particularly important for both real estate and finance, to the extent that really you can separate the two anymore. So yes, intellectual property law, the law has obviously been really important in promoting that. And coming back to the kind of the geographical question, that has obviously been something that has taken place on the basis of both national law, but also the promulgation of international treaties and norms, whether that takes place through international institutions or through bilateral treaties. Yeah, that's obviously been really, really important. I mean, again, when we're thinking geographically about the international level, the way in which international law, things like investor-state dispute settlements have just been used to really like bludgeon the least powerful states, and particularly those that kind of try and come up against and push back against these kind of mechanisms of power, and they've been used to promote hyperglobalization. Things like Chevron suing the Ecuadorian government, or Philip Morris trying to sue the Australian government. That's obviously been really important. But I think perhaps the most important, and just coming from the things that I know about, perhaps the most important way in which the law has created these opportunities to kind of create and trade new assets, as well as opportunities for regulatory arbitrage, is in finance. And finance is one of those things which is, the entire existence of the finance sector is premised upon the provision to banks and private financial institutions by the state rights to create credit, rights to trade assets, rights to create new assets. So, you know, the advent of securitization as a phenomenon wouldn't have been possible without the introduction of legislation to allow that to happen. I already mentioned the Basel Accords and the opportunities that those created for regulatory arbitrage that allowed financial institutions to profit massively from laws that were supposed to kind of, I suppose that were allegedly for the containment of systemic risk, but actually ended up being nothing of the kind. And you know, you can see that today. And particularly, I think one thing that's very interesting about the regulations that have been introduced in the wake of the financial crisis is that we're increasingly seeing, you know, in many ways the period between 2000 and 2007 was that becoming very, very central to financialization and the financial system as a whole, which was, you know, historically relatively unique. And again, that was based a lot on legal innovations. What we've increasingly seen since then has been the growing dominance of asset management, I suppose, of that kind of broad class of you know, institutions that invest capital on other people's behalf, and the way in which those institutions have been able to basically profit from regulations that have been introduced to kind of curtail the activities of banks has been very interesting to watch, especially when you think about the links between those institutions and others and other sectors like the real estate sector. I think the massive growth in these real estate investment trusts and the way in which they've been used to kind of deepen the process of financialization of housing has again been something that's been very interesting, and again based on legal innovation. So yeah, the law I think has been really, really central to the you know, profitability of the finance sector, particularly in recent years.
Great. And Mary, do you want to come in on this?
Yeah, so it's really refreshing that to have so much agreement on the kind of active and enabling role that the state has played throughout neoliberalism. I think Grace has done a really good job of explaining the kind of role of law in providing that enabling role. I'd add, I think it goes far beyond the financial sector, platform economy. I think the privatised utilities, you know, following privatisation of water, energy, they were entirely dependent on the state to create kind of regulatory framework which sought to emulate market-like structures. So all these things are entirely conditional on the state, and it's very refreshing to be on a panel full of people that kind of get that and agree with it. I think it's important to stress though that the relationship between state and capital, or the tendency for the state to serve the interests of capital, is not deterministic in any sense. You know, I get a couple of points on this. First, I think there is, like I argued in my talk, that there are ways in which capitalist interests directly influence policy making, and that these are discoverable and provable to some degree. I also think, without sort of getting too speculative, there are feedback mechanisms that mean that a state that even desires relative autonomy from the interests of capital will often be forced to end up serving the interests anyway. So to give an example, Grace referred in her comments to the implicit backing that the state gives the financial sector. I think that's generally true, but again, I don't think it's deterministic or necessary. And I think if we look at what happened with Lehman Brothers, that's an illustration of that relative autonomy, but also of this feedback mechanism where the American state in this case tried to let market forces do their work. The fallout was so catastrophic that, you know, they realised that wasn't a goer, and, you know, and were forced to provide this implicit backing for the finance sector subsequently. So I think that's a quite stark illustration of this relative autonomy. And I think this, so I think on the one hand, you've got relative autonomy of the state to define its own interests. I'd also point to, I think, Brett's argument about the Tory party and their support for Brexit, suggesting that they're not the party of productive capital. And it certainly seemed that long periods in the last few years that they haven't been the party of capital at all. So I agree with that. I don't think it's as straightforward as they serve the interests of rentier capital. Instead, I think there has been a relative distancing of the Tory party from the interests of capital for political reasons, for their own reasons. Not all sections of capital, obviously they need alliances there, but I think that the alliances are are more complex, which points to another factor in kind of why it's important to remember there isn't this deterministic relationship between the state and the interests of capital, and that's competition between different factions of capital. What serving the interests of capital means is not uniform. There's not a single answer to that. This is something that's determined both through the balance of forces between different factions of capital, through circumstances, and through the state's own definition of its own interests. So yeah, just to finish on a word about the question about the different levels of government, national and municipal. I think Brett's completely right that the national, it's not a symmetrical it's not an equal relationship. You know, a lot of the kind of changes that we've been talking about have been driven by national government, and I think you can see if you look at the kind of history of outsourcing since the 1980s, there are clear legislative compulsion, series of clear legislative compulsion, acts of legislative compulsion to make local authorities outsource services, and then we've seen a variation of patterns which I think will reflect the same kind of conjunctural factors in the degree to which some local authorities, including Labour local authorities, have embraced outsourcing with both hands. In other instances, you're seeing even examples of Tory councils doing some insourcing because in terms of their immediate priorities, it works better. So a varied picture, disproportionately national, in summary, and I'll leave it there.
Great, thanks, Mary. So I think just one more thing would be if any members of the panel want to raise any questions, and don't feel obliged to if you don't want to. I mean, otherwise, I think we've gone through the questions in the YouTube comments, and it's Friday night. So if anyone wants to raise anything, go ahead. Mary?
I just remembered one more point I was going to make, which relates to the question of the state, sorry. Which is that I just think it's important to be sensitive to and aware that part of this story is a change in nature of the state. So the change in role of the state, the state has taken a series of measures. I think we all agree that since the 1980s, the state has pursued a series of measures that have served the interests of certain factions of capital, eroded the both organised and individual power of the working class, and this has led to structural changes in our economy, a number of which Grace touched on. I would argue that this has also changed the nature of the state and its functions without it being a kind of a crude shrinkage. I don't think it's a shrinkage, but I think this is important because for me, I don't agree with Grace that it's best characterised in terms of planning. I think one of the consequences of the kind of reforms that the state has introduced for the last 30 to 40 years has seen a hollowing out of the state's capacity to plan, for its loss of internal expertise, capacity to deliver services. I think these have really come to a head in the context of coronavirus, where having sort of taken the attitude in relation to social care, for example, that it's not their responsibility, it's privatised, this isn't a matter of interest for government. The coronavirus crisis has sort of created a huge political, moral and economic pressure on government to take action in relation to social care. And one of the things we've discovered is they simply don't have the levers to do so. They don't have the capacity to do so. And I think this is just as an illustration of the capacity of the state. One of the results of one of the features of the neoliberal state is that this loss of capacity and an inability to plan. You've seen the ability to do things directly replaced by skills such as contracting, for example, as things are increasingly outsourced, or the transfer of direct ministerial influence over things like the NHS to separate bodies, which have an element of central control, but also exist outside of Whitehall, outside of ministerial control, again, which has interrupted the capacity of the state to play that kind of planning role. Just wanted to mention that. Can
I come in very quickly? I wanted to respond to just, I was going to respond to just one, well, I'll just respond very quickly to two things that Mary said. The first thing I think was really important in both the point about the relative autonomy of the state and also the points about the Tory party and whether or not they, actively are entirely the representatives of the interests of capital. The point about state autonomy is important because it comes back to the fact that we're talking about structures rather than just or predominantly individual decisions and actions. The fact of the growing dependence upon sectors of the capitalist class that have perhaps become so systemically important, and in becoming that systemically important, generated forms of instability that mean that even if we have the most archly orthodox neoliberal government that doesn't want to see any level of intervention, that is, all for the kind of Schumpeterian forces of creative destruction, we end up in a situation where there has to be a bailout, where, it is all but impossible not to do things like have extremely loose monetary policy because of the massive buildup of debt that there's been in the economy, which would mean that if you raised interest rates, then there would be some form of quite significant collapse. So I think it does come back to the point we're talking about structures rather than just or even predominantly ideology. And I think that comes back to the point about the Tory party as well. I think the thing that we've seen today, Cummings being ousted, is indicative of a struggle that is taking place within capital and within the Conservative Party as well. I think, this is a controversial view, but my view is that Cummings and over in the US, Bannon represented a kind of disruptive force that was aimed at revolutionizing conservatism away from a more kind of, traditional free market, what you might call kind of Osborneism, and towards an acknowledgement, basically back towards a kind of attempt to re-embed markets and combine that with a level of cultural reactionism that would consolidate a conservative coalition that was actually, to an extent in danger, if you think about the politics of Osborneism. And I think that comes back to another point, and the point about planning as well, because I think, the real issue that we have at the moment, again, it comes back to this point about structures, is that to a greater or lesser extent, however you characterize the rise of financialization or renterism or whatever you want to call it, that shift in our economic model has generated crises. And those crises often take the form of collective action problems within capital that require some level of cooperation to deal with. And often that cooperation, it has to be undertaken by the state. If you think about the state in the kind of classical view as an entity that is supposed to solve collective action problems, that is increasingly the role it is playing for capital. And I think that's also when we're thinking about planning and the areas of the state that are actually undertaking that planning, that has been associated, we had perhaps some form of planning in the post-war period that was responsive towards the interests of workers to a greater extent. And you could put that back to kind of, the planning of the Department of Trade and Industry. I think the reorientation of state planning towards more obviously serving the interests of a particular section of capital has also been associated with a transformation in the areas of the state that undertake that planning. And in particular, it's an increasing role for central banks. I think that's a really, really important point. But also, to a lesser extent, treasuries over other ministries, regulatory agencies, and kind of quasi-governmental organizations that consolidate and help to organize forms of private planning often. So, you can think of like private self-regulation organizations that often exist within the orbit of these kind of regulatory institutions. And also, the kind of increasing role of international institutions. So I take your points about the lack of state capacity, but I also think that those roles that previously might have taken place in particular ministries oriented towards particular planning problems and particular collective action problems have shifted to other parts of the state where they're oriented towards different kinds of collective action problems and different kinds of planning.
Great. So I think with that, we will call it a day. I'm going to say a couple of reminders. Firstly, buy Brett's book, 30% off. Buy Grace's book, coming out. email Mary and tell her to write a book so that you can buy it, because we'd all like to read it. Please do that. And please remember that both HM and the Deutscher Prize are kind of volunteer institutions. And if you can donate any money to them via the links that are around, please do that. You know, they need your help. These are institutions which I think are really important parts of the left. And I think it's important for us to keep them going. Please remember also that the HM program is finishing on Sunday. So check out and see what's going on later. I myself am on a panel at 10:30 on Sunday morning because why, I don't know. These are the things I do in my life. And but yeah, thanks everyone for these great presentations. I think there was a lot of food for thought, and enjoy your weekend, everyone. And please keep coming to HM. Thanks.